Let's get some analysis as we're in the home stretch of reporting season. We've got a big week for tech. Think Afterpay, industrials. Well, we've got Qantas as well. Trent Primer from Barclay Pierce Capital is joining us live via Skype. Trent, nice to see you there. Just give us a one-liner if you had to sum up reporting season thus far.
Cracker. It's been pretty good. It's been good. It's been interesting. It's been very, very positive. A lot of companies obviously maintaining full dividends, a lot of acquisition interest in the market. There's obviously what we flagged prior to reporting season was a lot of companies not providing outlook for FY22 because obviously, with COVID, we don't know when this is going to end, when the snap lockdowns are going to end. But yeah, I'd say pretty positive overall.
Yeah, but to your point about guidance, I mean, even though Michael Hill, for example, today had a pretty bumper result, it wasn't willing to put any figures around guidance going forward. I mean, we saw that again, even big ones like JB Hi-Fi. How do you as an investor, Trent, rate that reluctance?
I suppose that's the million-dollar question in this market. Moving forward, how are people going to navigate some of their staple stocks that they've held in their portfolio for years? My guess would be a lot of people would be taking this chance to absorb some profit, move into some defensive names in the portfolio, and probably hold some cash, maybe some gold and some key commodities. But I'd hazard a guess that people would be taking some profit off the table, given the hesitancy for companies to provide any guidance or outlook. It's with the market quite high where it is now. If there's any surprise earnings downgrades, a lot of these companies are going to get sold off quite hard, and we've seen reflections of that this reporting season. Even companies providing fairly strong numbers, but missing slightly expectations, they've been sold off pretty harshly. So I expect investors to navigate the market and their portfolios with a sense of caution. So.
And then, you compare and contrast that need for caution against what's going on in terms of M&A. I mean, Ampol and Z Energy in New Zealand, Spark Infrastructure today accepting that private equity takeover offer. I mean, you do get the sense that there's still so many cashed up corporates and big investors, big pension funds, et cetera, that are still looking for big investments. I mean, what does that do? How is that a counterbalance to some of the caution, I suppose, that's pushing into markets?
You can play both sides, really. If, let's say, a client's got an entry price into a stock, the stock's performed quite poorly. They're sitting on maybe a 50% unrealised loss in their portfolio. The company gets swooped up because it's trading on a fairly low multiple and the share price has done nothing. So, of course, people are going to vote for a takeover of that company, probably mitigate some of their losses. I mean, you could play it a number of different ways. Acquisition interest has been pretty rife, like you said, because a lot of these funds and private equity groups are quite cashed up. In particular, for any of these favoured companies or strategic companies that they can acquire, if they're trading weak, then that's obviously an opportunity for them to snatch up some of these favoured names to add to their asset portfolios. I think also debt is quite cheap as well, and you can play both sides of it. Because debt's so cheap, valuations have increased insanely, which makes it harder for some of these acquiring businesses to acquire companies that they like. Vice versa, debt being so cheap, a lot of companies holding quite a lot of debt on their balance sheets just for this reason, to acquire other businesses. Yeah.
So where are you guys at Barclay Pierce in terms of sector looking for, some strength still going forward?
Look, I think overall moving forward, we expect support in rare earths, renewables, some of the key commodities, and anything that has exposure to electric vehicle thematic and renewable energy, in particular, your copper, your nickels, lithium. And we expect support in consumer discretionary and some retail due to consumer spending and obviously pent-up savings during these lockdowns, along with banks, given how obviously leveraged they are to rates and economic growth. At this point, the outlook is a little bleak, like we spoke about before. We don't know when these lockdowns are going to end. All we can do is sort of look to rotate our clients into some defensive names, some names that make sense, hold some cash so that we can acquire some good names across our clients' portfolios and buy on some weakness for some otherwise pricier stocks. That's our strategy moving forward.
All right. Well, thanks for sharing your investment strategy with us and our viewers, Trent. Hope you have a good one
Thanks,
there.
Nadine.